Are you guys ready? Things are bad. We're going to see a lot of red in the market. I think it's time to get mentally prepared. Things are not the best. Things are pretty rough. We've got stonks that are down considerably. You see Palantir right there, 653 pre-market, down another 3%. Netflix, 164 in the pre-market. It's down. Tesla is at 701 pre-market. Briefly hit below 700. SPY at 390. We are witnessing history. I want that to be very, very, very clear. We are absolutely witnessing history right now. What's happening in the stock market at this day and age, given the world that we're in, this has not happened in a very long time. 2020 we saw this, but it rebounded so quickly, and the catalyst was the Fed was pumping a ton of money back into the market. So because the catalyst in 2020 was that there was such global uncertainty for the pandemic that we needed this actuary, this figure that could actually bring some light and to give certainty, we had that Federal Reserve and we had that money, we had that stimulus. That's not here anymore. In fact, that actually caused a problem. Granted, the Fed did the best they could at the time. So we've got rampant inflation. The producer price index just came out, and it's not good. It increased 11%, which means that inflation is likely going to be here for a while. I mean, to think that it's going to get below 5% before the end of the year, probably not going to be happening. Lost $10,000 this week. Paper losses, of course. Still, for some reason, I think I can afford this stuff. I don't know. The caramel helps through some of the pain. It's going to be rough today. It's the fourth or fifth consecutive day of this stuff happening. So it's going to be pretty rough. Let me go through some of the comments. Good morning, guys. Hype for you versus Strongman tomorrow. That's going to be fun as well. Palantir long. Yep, going to be another 20 or 30K down today. Happy times. Happy times. One of the things I also think is important is to learn to enjoy this because we're witnessing history. And the other thing to not be as gloomy is people are going to make a lot of money. I mean, people are going to make a lot of money. If you had 100 grand right now and you started deploying it into the market, or not even 100, like 10 grand, like whatever you have, if you pick the right stocks, I mean, even if you pick the S&P, you'll make money, but if you pick the right stocks, and I think Palantir is one of those right stocks. By the way, guys, JP Morgan, let's give a little bit of hopium here. JP Morgan Chase increased their Palantir position by 1,000%. I don't know if you guys know this. Where's this account? Why does it never pop out when I try to find it? Okay, hold on. Let me get to it in a second. JP Morgan increased their position by over 1,000%. They had 300,000 shares. Now I believe they have 3 million shares, if I'm not mistaken. So that is very good. How old is Amit? Amit is 24. I'm down over 300K over this past year. Being down big means you will be up big. It's just, and again, no one, let me say this very clearly to everyone who's watching this, all 84 of you. No one should feel bad that they're down in the market. Absolutely no one. We did a segment on Money Talks today that I'm probably going to react to on my channel because I think it's important. You should not feel bad about being down in the market. It's not your fault. You can't say it's your fault for buying certain stocks. You bought stocks that you thought were a great value at a great time. You are not Nostradamus. This is not your fault at all. This is just the nature of how things operate when it comes to stocks. And this is a down market. You didn't expect it. No one expected it. We're here. JP Morgan Chase has filed a 13F form disclosing ownership of 3.9 million shares on May 11th. So I doubt, this was maybe around May. I doubt they sold it off that quickly. Maybe, hopefully not. But it's a lot of money. This was so they filed in May 11th. This was on March 31st. So they had a month. Maybe they sold off some shares in the past month, possibly. But if you had 338,000 shares at the end of February and then you increased it at the end of March, 1,000%. I really doubt you just sold all of that a month later, even though the market tanks. So, nonetheless, I mean that is a good thing that JP Morgan has increased their shares. Additionally, Bank of New York Mellon Corp increased their shares by 2%, and Raymond James Financial Advisors increased a 37.9% increase in Palantir. So, some big funds are buying. Are you buying more Palantir? I was thinking of it, but I do think there's still more pain to come. Yes, I will be buying more. It's just not right now. I want to see how much more pain comes. I mean, I'm getting ready to see Palantir at $3-4. It's just there's no sign of a bottom at all. There's no catalyst for why there would be a bottom anytime soon. So, and by the way, I just bought $1,200 worth of Palantir last week. So like I bought the dip, guys. I bought 11,000 worth of January, February. I bought another couple thousand the past 2 months. So I will buy this dip. It's just I'm not in the biggest hurry to do it. Turn the mic up. Okay, let me turn the mic up. Oh yeah, the mic was down big. Sorry guys. If anyone needs the mic up, let me know immediately, because for some reason the computer auto like does that with the mic. Well, I'm going 100% cash no matter what the price is, so we're probably at the bottom. Feel free to buy the dip. I mean, I don't know if going 100% cash right now is a good idea either. You remember what me Kevin did back in January where he sold and all this stuff, timing the market? It didn't work. If me Kevin actually wanted to time the market, he would have sold at January and then bought now. But he rebought in March, and he's down $2 million right now. So, you know, no one's a genius in this. And me Kevin, I think, is a pretty smart guy. Even he mistimed it. Like, you cannot feel bad about this. Please do not feel bad about this. Shout out to 145 people here in the chat. Please make sure to like the video. I think we got like 4 likes. It would be awesome if we could get 145 likes. Helps out with the algorithm. We are going to open the market within a couple of minutes. I will try to time it again because my thing is always on delay. So let's see if I can get there. I'm expecting, if we go to the pre-market, we're looking at a lot of red. I'm expecting a lot of red. We are seeing stocks getting absolutely decimated. Upstart at $28. It's down like 60% in 2 days. That's insane. Coinbase, Cathie Wood. Well, it's down. Wow, Coinbase is at 49 pre-market. Okay. Cathie Wood bought 600,000 shares of Coinbase yesterday. Yes, 600,000 shares of Coinbase. Not $600,000, 600,000 shares of Coinbase. That's rough. That's very, 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 very rough. Well, I mean, that's basically that's what she wanted to do. She wanted to double down on Coinbase. Now, I think Coinbase is in a rough situation because it's tied to crypto. So obviously she has to do this because she believes in crypto. They have this bull case that Bitcoin could reach $1 million by 2030. I mean, maybe. So I guess we'll see what happens. But she doubled down on that. ARK is at $36. Let's look at the chart of ARK. And again, whenever I do this, it's never to make fun or anything because I'm down money as well. It's just to like witness history together. I don't have beef with Cathie or anything. Like, it's just, I'm mad she sold Palantir, yeah, but like in hindsight, it was probably a good decision. But the other stocks she bought are also down. So it's kind of like the only good decision would have been to just sell out of the market, right? When she sold Palantir, that's how I would respect, like, oh, she's a really smart person. But she just bought the dip on other stocks, and other stocks have dipped just as badly as Palantir. So there's no beef or anything. It's just, it's witnessing what's going on in the market. I mean, this is just incredible to witness, right? It's not like some opinion that she's bad or someone else is better. It's just like, wow, I cannot believe, like, you know, I'm witnessing this. I've never seen a bear market like this. Look at this. This was 2020. Look at this. Look at this compared to 2020. I mean, this was 2020. There was the dip right there. That was March. You see that? March, $43, and then boom. And now that's the actual dip. That's when things got incredibly rough. I think it's important to keep a smile on days like these. To remember you have health. Remember you have family. Remember that there are things that are way more important than the stock market. We have 2 minutes, by the way, until the stock market opens. There are things that are so much more vital than the freaking stock market. There are things that actually matter in life, and those things need to be respected and cared about. And if you're not just obsessed with the market and you actually are doing stuff on the side, you're building something, you care about something. For me, I have a startup, so I'm working very hard at that. Then, you don't worry about it. The other thing I was going to say, market's going to open in about 30 seconds. I'll try to time it correctly. Is that if this was money that you are not going to take out for the next 5 years, it really shouldn't matter. Like, that's the ironic thing about all this. If this was money that you put in the market that you did not want to see till 2028, why does it matter if it's down in 2022? Why? I have 64 grand in the market that right now is at almost 22 grand. I wasn't going to cash it out until 2028, 2029. When I'm like, I would be what? That's 6 years from now? I would be 30? Something like that. Yeah. So like, I wasn't going to even look at it. So if it's back by then and hopefully it appreciates, then that'll be the good thing. All right. Let's see if I can time this. The market is open. Wake your ass up. Here we go. We are in the stock market. I think I was a little bit late on that, but let's see. All right, here we go. What we got? It's red. Let's go to S&P. S&P 389 opens below 390. So that is red. There we go. One of the biggest indexes. That's red. Bitcoin, 28,000. Bitcoin was at 25,000 at one point. Look at this. 25,373. That was right early in the morning. But it seems like that was the floor for Bitcoin. It jumped right off of that. Tesla's a 704. Tesla, we're probably going to see go below. I mean, yeah, let's see what happens. Tesla's climbing up, though. Tesla's climbing up pretty fast. So I think people are buying the dip heavy on Tesla. That's what it looks like. Palantir, 654. Okay, nothing too crazy. Palantir is there, 654. It's pretty stable. I mean, I think it closed at 670 yesterday. Well, the fact that I'm even saying 650, that's awesome. It's like we were at 730 yesterday, so like we're down pretty bad from there. Stocks are relatively flat. Nothing crazy is happening. Amazon, wow. Is this the right Amazon? No. Right. Well, this is the right Amazon. $83 away from being down 2,000. Now, the multiple on Amazon is still high. I just want to say that. The multiple on Amazon is still high, and it's a little expensive. I was listening to some stuff on CNBC yesterday, kind of talking more, digging about the numbers. Apple at 125, I'm hearing, is probably a good buy. Now, if Apple gets to 125, and to move Apple, the market has to really go down because Apple is a majority of the NASDAQ and all these other indexes, and they have so many shares. So to even move the price 5% because they have so many shares outstanding because they do so many stock splits, it's a lot. So Apple at 125, I'm loading up the boat at Apple at 125. Coinbase down 12% opening. Wow. Wow. That's a rough one. That's right. Let's look at the chat. You guys are so dumb, man. I bought Palantir at IPO, sold at 45 and shorted to 7, bought back in. It's easy, guys. You just have to look at the chart and time the market. Yeah, I mean, look, congratulations, you're able to do that. It's not the easiest thing in the world. And if you think it's easy, then okay, go be a professional day trader. I think to most people, it's not. But if it is for you, then that's great. In general, I wouldn't advise people to just be like, it's easy to time the market. It's like, no, it's not. I don't think it's necessarily easy to do that. Strongman thinks Apple is going under 100. I mean, I don't think it's going under 100. That's a lot. I think it could go to 125 though. I think that's reasonable. Because that was like the technical area when I was looking at the charts where it's like bounced off of. So that should be that. I mean, we'll ultimately see what happens. Amit, sometimes all you speak is BS. Thank you for being here, Gaurav. I'm happy you're in the chat. Sometimes when I start reading these comments, if they're like a negative comment, I can't stop reading it. I was like, Amit, sometimes all you speak is magic. It's like, I can't just change it right when I'm on the spot, right? So, look, everyone, here's the other thing, guys. Everyone on the internet, we were talking about this on Money Talks today. This is the thing about Jim Cramer. Look, he's been talking about stocks for like 30 years, right? He's going to have some bad takes here and there. Everyone right now that's trying to analyze what's going on, at least from my perspective, I'm trying to give the most level-headed thing I can see, which is like, okay, stocks are down. There's a lot of philosophy and psychology you can talk about. And wow, Apple's at 142. Apple's already down 3%. Man, yeah, it's not going to be good for the market. It's going to be rough. I try to talk about the psychology of DCAing and all that type of stuff. And those are kind of like basic things that I've come to learn over the past couple of years. But I also talk about just like the logic of this, which is like, look, no one, if you think someone's speaking BS about the stock market, realize that everyone's speaking BS about the stock market. Kathy Wood manages $60 billion and now it's like $20 billion. She was speaking a lot of BS over the past couple of months, but it's not just her. Everyone's lost money. The only smart person in the market that's not quote unquote speaking BS are the people that held onto their cash and they sold out everything in January. There's very few people that did that. I mean, Warren Buffett did it. Warren Buffett's been buying more than he bought in 2008 right now. Like, so that's why when you say you can time the market, it's like, no, bro, people can't do again, Meet Kevin tried to do this and he failed at it. And he's one of the most like popular financial people. A lot of people try to time the market. It doesn't work. That's why hedge fund managers, they don't try to time the market. They just have rules. If it drops below 15%, I sell. If I see a good price, I buy back in and I deal with my losses and wins. And over a 5-year timeline or 3-year timeline, I hopefully give my clients a good return. That's how it goes. Salesforce at 156. Salesforce is down. Costco. Wow. Costco below 500. Let me tweet that. Got to tweet that. Wait, is that the ticker symbol? Costco? Cost below 500. Boom. There we go. What's going on Twitter? How bad are things? Margin calls are about to be glorious. Yeah, I hope no one's on margin because it's a little rough. This is Meet Kevin's lock screen. SoFi reached an all-time low. Affirm reached an all-time low. This is all at the same time. Look at this. All of these reaching an all-time low. Goodness gracious. Palantir long. I sold 1,300 shares of Apple at an average of 168 in the last 3 months. Amazing. That was good. Not bad. Not bad at all. Chris said, getting my apartment back this Sunday. You got to come soon and grab a drink. Chris, I'm down. Absolutely. Let's definitely do that. Oh, Lifop says you getting the sarcasm. Oh, so the guy who said he was timing the market that I went on a rant on, he was being sarcastic about timing Palantir. Okay. All right. Well, at least you gave me the opportunity to go on the rant because I think it was important. Yeah, man, things are rough. Things are rough. Roughy. The question now is, how do we deal with this? So let's go to CNBC. Disney Plus, by the way, they had earnings. Disney stock's getting demolished. So let's go to Disney stock. They increased streaming numbers. Who has Disney Plus, by the way? Put in the chat if you have Disney Plus. They're down 5%. They have 137 million people streaming, but they are warning for slower growth. And Netflix, remember how 2 months ago on their earnings call or last month, they were like, hey, when you guys gonna bring up ads? And Reed Hastings was like, yeah, we hate ads, but we're going to do it. It's going to take us 2 years to incorporate it. Well, they came out and they said, yeah, we'll get it done by the end of the year. They're like, yeah, we'll figure it out. We'll get the ads soon. We got you, because they need to like get that money from the ads. So the health of streaming is not good. It's not a good time to be a streamer, which is why my thesis on Spotty Boy is also, look at them. They're at $90 right now. And again, this is just, the whole market sucks right now, but Spotty Boy and their Netflix a podcast, I'm not sure. I'm not sure about it. That's not how I would think about it. Facebook down at 186. Facebook is stopping the hiring and certain procedures of getting people onto the Meta Reality Labs division. So they're not spending that much time on their metaverse stuff, or they're like lowering their spend on the metaverse stuff because it's not making any money, and right now they need to save money. Snowflake, Palantir competitor, 127. Did Snowflake earnings come out? Snowflake, I think it was supposed to come out today. Did it? No, it didn't come out yet. Oh, no, it did. Yeah, Q1 2022. Okay, so let's see it right here. Oh, it's out. Awesome. Let's see the press release, Q1. Okay, Snowflake product revenue of $213 million, representing 110% year-over-year growth. Okay. Remaining performance obligations of $1.4 billion, 206% year-over-year growth, 4,500 customers, net revenue retention of 168%, 104 customers with a trailing 12-month product revenue greater than $1 million. Okay. So that's not bad for them. They're still down pre-market. Revenue for the quarter was $228 million. Now, Palantir made, by the way, 400-something million. So Palantir's making more revenue. Obviously, their growth is not as big as 110%. They're growing 31%. But nonetheless, what are their margins? What is Snowflake's margins? Let me change this thing right here so you guys can see it a little bit more. What are Snowflake's margins? I'm really curious about this, actually. And I want to know how much they spent on sales and marketing as well. So GAAP profit, that was the product revenue. Product gross profit, $149 million, $141 million. Oh, they have a 66% margin. Non-GAAP. So they lost $35 million. Interesting. Okay, I want to know what their adjusted operating margin is. So the reason we're looking at Snowflake is because obviously they're a competitor to Palantir, and they're down. How bad are they down? 126. Amit, look at the comment section. No, look at the data, Amit. That's from 2021. How is this from 2021? I clicked on 2022. What are you talking about? Oh, shit. You guys are right. Wait, but this doesn't make sense. Snowflake reports for the first quarter. No, look, this doesn't make any sense. I get what you are saying, but this doesn't make any sense. Snowflake reports financial results for the first quarter of fiscal 2022. Or am I definitely reading that wrong? Like, I clicked on Q1 2022, and that's what I got. That's last year's results. Wow. All right. Well, I just wasted 5 of your minutes, 250 people. Look, this doesn't make any sense. What the Why does it say upcoming Q1 2023 scheduled May 5th? It has to be Q1 2022. Is that me? Like, hold on, we gotta investigate. If I click on Q1 2022 and that's the report, that makes no sense. That's also that should say Q4 2021. Or that should say full year 2021. All right, whatever. This is stupid. Well, either way, Snowflake is getting hammered on its earnings, but I am sorry for wasting your time. What a way to this was happening in the market, guys. I'm going insane. I'm trying to find these results, and it's anyway. Snowflake's down bad. I suspect Snowflake could go to around the 105-ish range. Their market cap is still at around, what is this, a $40 billion market cap, even at 127. Warren Buffett made an $800 million profit, I believe, selling it around 250 IPO price, so he's out of it. Apple at 140, my goodness, that's down already. Fiscal year starts in October. Okay, that makes sense. Damn. Oh, well. Whoa, Tesla. Someone says 865. Hold on. Yeah, there it is, baby. Tesla. There you go. 688. Are you still buying Palantir? Yes. I mean, most of us are still buying Palantir. Amid stock snoob confirmed. Yeah. It was rough. So Tesla at 690. Okay. Let's do some analysis on Tesla. Their market cap is at $718 billion and they're $690. Okay. So Snowflake is going over 100% because they have thinner products and great marketing. Can't Palantir do that? Yeah, well, Palantir, they don't have good marketing, to be honest. They could get the thinner products, but the marketing is the issue. At $700 billion, if you're buying Tesla right now, and Tesla's growing at, I believe, 81% year over year. They just did $17 billion in revenue the last quarter. What's their price to sales? Price to sales, where is it? I just saw it. 14. Google is trading at a price to sales that's below Tesla, by the way. Google, I think, is like 6, right? 6, yeah, 6 price to sales. And man, the Tesla thing is interesting because it's like, again, it's so many institutions that bought it because of the run-up. And yes, there is the growth to justify it, but when it gets rough, I just wonder if the institutions are going to stay. I know the retailers will stay, but I wonder if they're going to stay. Amit, do you think Palantir will be able to get to non-GAAP profitability this year? I think this could be huge. Yeah, I mean, I think you mean GAAP profitability. Yes, I think I don't know if it's going to be this year, but I think it's very possible. They're at 9% now. They were at 14%. They used to be at 30% operating losses. If you take away stock-based comp, they're 30% profitable or 27% profitable. So last year they would have had $500 million of profit, but obviously, stock-based comp. So I think it could happen if they keep reducing. I think they have to show it. Like, to me, the incentive for them is to keep showing the reduction to get to GAAP profitability. Because if they don't, that chart's not going to look nice. And I think in order to keep that chart in there, they need to make it look nice. I would rather buy Palantir at 6.5 than Tesla at 200 or 600. Yeah, who would put it in the chat? Would you buy Tesla now or Palantir? Because if your portfolio is mainly Tesla and Palantir, let's say you have $10,000, which one are you buying? 10,000 divided by Tesla gives you 15 oddish shares, roundabout. Let's do that. 10,000 divided by 700, roundabout, right? 14 shares, yeah. And then 10,000 divided by 650, let's say for Palantir, you got 1,500 shares. Ah, boy. I would buy Palantir because Tesla. If we have a market, like the thing is, the market propped up Tesla. Yes, it had the growth, but it propped it up to get to that 700 range. If the market collapses, does Tesla collapse as well? Does Tesla's or just all of Tesla's growth over the past year just go away, just like everything else, because it was artificially propped? Now, I'm not saying it's artificially propped. I'm saying that's what the bears say about it. And I think that's the overall question around this company. Most of you are saying Palantir. Some people are saying Tesla. Interesting. Kathy Wood on suicide watch thanks to coin. Bro, that's the other thing about Kathy. Why did she buy this shit yesterday, bro? This is the part that I confused. She bought this shit at, it was, I don't know, like 58 a share yesterday, 600K shares. It's down 17% more today. Like, let's look at the Coinbase chart real quick. Couldn't she have just waited a little bit? Like, let's look at the 5-day. Look at this. It was at 112 on May 6th. It's at 44 now. And if we look at the year to date, I mean, it was at 250 January 3rd. And the max, obviously, the highest it got to was around 340-ish. And now, it's just... Brian Armstrong, CEO, was worth $13 billion. Now he's worth like $2 billion. So that also got him. Roku. Roku. Tesla at $200 interested. Yeah, that would be interesting. Even if Palantir reaches 50% its all-time high in the next few years, it's a 3 return on your money. No brainer. Yeah, that's true. I mean, if Palantir gets to what, $18, which is 50% of 36 or whatever, it's a 3x right now. So that's why it's like, if you're loading up on do we really think Palantir's not going to get back to $20? Like, do we really think that? It's like, I don't think so, bro. I don't think it's one of those growth stocks that are dead, especially if you know why you're buying the stock. So for it to 3x is very reasonable at this point. For this to 10x, I know the market cap would have to 10x, but I mean, for it to go from 6 to 60, if we're just talking about pure stock market price 10x, I don't think that's unreasonable at all. I don't think so. I shorted Coinbase for 4 hours, started yesterday and closed today and made 65%. My account is still down. Yo, I've never shorted a stock, bro. I've never done it before. I'm a little scared to do it. So I haven't done it yet, but I also just don't have the patience to do it. But yeah, it's good you made 65% on that. Tattooed Chef, $6.11. Someone check on Jeremy, bro. Someone got to check on my guy Jeremy, man. It's rough, bro. I love Jeremy too, but damn, that's rough. Like, he was buying this shit at 22, 21. And same thing with me on Palantir, right? It's not like I'm not saying I'm holier than thou. It's just like, sheesh, man. It's rough. Let's go through Twitter. Let's make ourselves laugh on Twitter. Because all 200, shout out to 270 people being here in the chat. Let's all laugh on Twitter, because why not? Let's also tweet that we're live. I think that's the fun thing about these lives as well. We can actually like see some stuff that's going on in the market. That's different. Coin at a PS price sales of 3. What the F is going on? No way crypto is that bad. Interesting. Are you buying coin? 270 people all in therapy right now. All right. Cathie Wood is trending for business and finance. What are people saying about Cathie Wood? What are people saying? Cathie Wood's ARK Invest snagged nearly $3 million in Coinbase, blah, blah, blah. Cathie Wood ARK predicts a 10,000% 5-year compound annual growth. I think they're joking there. ARK, let's see what Peter Schiff, bro. Peter Schiff must be having a field day, my guy. Let me look up some of his videos. What is this guy talking about? He must be so happy. Oh my goodness, he must be so happy. We are about to suffer like never before. Now, granted, I don't want people to be super scared when they hear him, because this guy's been calling for a crash forever, and you're going to be right eventually if you're calling for a crash. But it's just interesting to see how it's going down. ARK is down 5% today, representing a 75% decline from last year's high. The main purpose of an ETF is to reduce stock-specific risk through diversification, but when every stock is owned or overpriced, it hurts investors. Fire Cathie Wood. Interesting, man. He's saying fire Cathie Wood. We're green. Are we green? We're green a little bit. Where's Palantir? Are we green a little bit? I mean, the market's yeah, I see. Okay. Wow, we're up 0.45%. We green. Look at this V-shaped recovery. Look at this beautiful V. We're green a little bit. We're green. And see, what's going to happen in the next, I don't know, 6 months, maybe a year, is this drop we're seeing right now, it's going to be a huge V back to the top. It's inevitable. It's going to happen. The question is, how many shares do you have when it's going to happen? And what's your cost basis when it's going to happen? But it's going to happen. The market, you don't bet against the U.S. economy. You don't bet against the most innovative companies in the world. They're going to have some rough times. And we might have a rough time for another 12 to 24 months. But when we get out of it, and if you're still alive, there is going to be a lot of money to be made on the other side. It's not a pie dream. It happens every time. I mean, let's just pull this up back for context. SPY. Let's look at the max chart on this. This is what it was. Look at this. 2008. This was decline. It was at 150. 2007. 2009 bottom 73. That's a 50% decline in the SPY. 150 to 73. And then to get back to 150, it took us around 2013. So it took 4 years to get back to the all-time highs, right? From 73 to 2013. Now, if you had bought at 150, you would be down 50%. If you started buying around this time while it's at 73 and 80 and 90 and 100, blah, 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 which means you've got to have, some disposable income to put into the money right there, then when it gets back to 150, you would have made a lot of money. And as we go further and further and further, then we get a nice bull run. Now you're at 200, right? It keeps going up. So if we had the S&P right here at 470, 478, that was our high. And now we're at the 380s, 390s. I think it could get as low as 350. First of all, 350 is not half of 480. I mean, we would have to get to the S&P dropped 50%, right? We would have to get to like 240-ish, 250-ish, around that range, or like 245-ish to get to half of 470. We're not there yet. 245. It does seem like it's a little bit of a stretch. This is why it's a bear market, but I don't think it's that crazy. So if we're at 389, if we have to get back to 480. And you start buying around here, and 2008 didn't have innovation and growth tech stocks. 2008 was just getting into what Facebook and Google would become. That's the difference. I mean, that's the Kathy bet, right? Now, maybe it's not her stocks, but that's the Kathy bet. The Kathy bet is like when this happened also in the dot-com bubble right here, we're at 89 and it takes forever to get back there. By the way, that came back actually fairly quickly from the stock bubble crash. Those companies were a dream, right? Those companies weren't real. But now this stock crash is more so, I think Sean put it really well. I had a tweet where I was just like, look, the market is, some of these stocks are not, these stocks are real technology companies. Therefore they will come back, which is different than 2001. Pets.com didn't come back because it was selling like a Ponzi scheme. It was fake. But Zoom is a real company, even though it's down, it has real revenues. Sean pointed out something very important, which is he said, a lot of these companies don't need to be public. Yes, they're real companies. Yes, they're providing real services like Zoom and Robinhood and Peloton, but they don't need to be public standalone companies. And I think that's the nuance in the market. Some of these companies don't need to be public, even if they are relevant and even if they are technological companies that are not frauds, which means we're going to see a lot of M&A. We're going to see a lot of acquisition. We're going to see some of them maybe go private, but the rebound should be this innovative, disruptive, rapid edge. And maybe it happens in 2 years, but it should be more exponential. Because now we have the internet. Like in 2008, we had the internet, but we didn't really have the internet. Now we have the internet. We didn't have this thing in 2008 where I could live stream from this laptop. Like I got a phone, I could access the world's information too. We didn't have that. And now that we have that, plus with all the emerging innovative technologies, that should be the rebound. The question is it the ARK stocks that will do that? Is it the Teladocs and all that stuff in the world? But in general, if you have a portfolio of decent tech stocks, that's theoretically what we should see is happening. I can't believe Palantir to 5 looks like it's gonna happen. Well, it probably will. Amit, how many Palantir do you have? I have 2,176 shares. There comes the red again. Yeah, there's the red. One thing Chris said in the chat, Carp better buy some shares. Yes, I agree. I really agree with this, man. We're gonna go back to Twitter in a second. I think Alex Carp and the Palantir insiders, they need to buy some damn shares. I'm sorry, but if the stock is this down, I know they don't have to, but it would feel really nice to see insiders buy even a little bit of a buyback. And I know a company with $2 billion on their cash balance sheets, they should deploy that in a better way than buying back their shares. But man, would it just feel good to see them buy back some shares, reduce dilution a little bit, and show the market that you guys are totally underestimating what we're doing. Now, Shopify CEO Toby Lucht did this yesterday. It was a little cringy the way he said it, but nonetheless, he did do it. Where is this guy? Toby Lucht. So he tweeted this yesterday. Amit, if you ran an ETF, what would be your top 5 stocks? Tesla, Palantir, Google, S&P. And by the way, I think everyone should answer that question. If you ran an ETF, what would be your top 5 stocks? Tesla, Palantir, Google, S&P, and probably playing it safe, probably either Apple or Costco. Costco would be like my hedge to the more the value play. Apple would be my bet that it's just Apple and Google. It's hard to go wrong with it. And then Tesla and Palantir are my growth, and then S&P is more my hedge. And there's obviously some better combinations than those 5, but that's on the top of my head. So great companies are built by great leaders. Having known Toby and Harley from the early stage and knowing the incredible strategic assets Shopify has, it feels like the market is over-rotated and is missing a great opportunity to buy. By the way, what is Shopify's stock 324. Okay, you don't see CEOs talk publicly about their stock price because if you do, it shows a sign of weakness. That's kind of generally what is understood in the market. Toby Luke says, thank you, Amish. Totally agreed on this being a market over rotation. I just placed a $10 million order for Shopify stock myself. It's time to build. It's a little cringe, but it's also like, I get it, bro. He's signaling to the market, you like, screw you guys. I'm buying more of my stock, which I get. I understand. And then this guy, Kaz, who's like he's the VP of Shopify. He says, I liquidated some of my family's portfolio and bought a significant amount of shop. And for the first time, talked to our team at Shopify about the stock price. So he sent this like really weird message in their Slack or whatever. And he's like, hey, I'm buying more Shopify stock, which I get. I totally get. Daniel Ek, CEO of Spotify, he also bought $50 million in his stock prices, in his shares as well as Spotify. So it does signal to the market. You know, but it would be nice, my point, if Carp and people in Palantir could buy some more shares. That would be nice. So yeah, that's kind of the way I think about it. Okay, so let's look at Peter Schiff. Kathy Wood is down 80% on her coin position, and of course she bought another 600,000 shares today. Peter Schiff has been having a field day primarily because he's really happy that the market is crashing horribly. And he's called this stuff for a long time. Let's just say Peter Schiff has been doing this for a while. And that's what is happening. Amit, 2,176 Palantir. Thanks. What's your average? 1966. 1966 is my average. Okay, a lot of you are saying in the chat you can't have S&P in your ETF. Well, I'll make it into the ETF. That's true. You can't have an ETF in an ETF. I was thinking more of like how my top 5 positions to hedge. It's not really about an ETF. I interpreted that question more so as what top 5 positions would you want to have if you had to pick top 5 positions. In an ETF, if you just have 5 pure stonks, I mean, yeah, I would replace the S&P with like either SoFi or Opendoor. I'm getting interested in those stocks, man. Like, I'm really getting interested in SoFi because I've been doing a lot of more digging on this AWS of fintech stuff, and I think there's an argument there. Now, it is a little cringy when they say, AWS of fintech, but... And the student loan thing is kind of screwing them. But like SoFi at $5 and Opendoor at $5, it looks bad. Now, Opendoor has the housing situation. If the housing market crashes, you would presume that Opendoor can't sell that many houses at a profit, even though they beat revenue growth 500% last quarter. But those stocks to me are like the major, or at least they have the potential to be major growth stocks. Because if you already have Apple and Google, then you've got some large cap security right there. So that's kind of how I would think about it. Peter got gold wrong too. That is also true. Costco gas price makes membership. Really? Do you get a discount on Costco gas prices because of this? Dara Kawasaki both bought $5 million of Uber. Yeah, Dara, the CEO, he gave a really good letter to his employees about Uber, basically saying, hey, we're going to transform this company. Really, really like him as a CEO. Okay. Anyone who had anything to do with the promotion, sale, trading, or custody of Bitcoin or any cryptocurrency or crypto-related equity had better lawyer up quickly as you're about to be sued. He's basically saying, hey, if you've ever talked about crypto, you're getting sued. Anyone who doesn't sell their Bitcoin now has no one but themselves for their losses. Hodl at your own risk and prepare to lose everything. Don't say I didn't warn you, and don't reply that this tweet won't age well because it will. It looks like a lot of my traders are waiting to buy Bitcoin dip below 30K. My guess is there's not that much dry powder to buy the next. I think the bulls are all in. When Bitcoin falls below 29K, it'll bottom out. Next stop 10,000K. Yeah, Peter is having a field day. He is having a field day. He's absolutely having a field day. Someone said you can put the S&P in an index. Interesting. I guess you can. Anyway, I just interpreted that question as my top 5 positions. That's what I talked about. Someone said Amazon. Yeah, Amazon would happen as well. Yes, always gas at Costco like 50% cheaper per gallon. Wow. My wife and I were looking at open homes, very easy to use, but only got 1 out of 10 was actually nice. The rest were refurbished, very poorly, bad quality. Yeah, Opendoor is interesting to me. I don't fully know what their business model is like. All right, let's look at this video by Schiff. Let's see what he's saying.
Data on mortgage applications that we got yesterday, the purchase index was down 8%, and that's following a 3% decline the week before. And the refi index was down 9%, following an 8% decline the week before. Mortgages and refinances are plunging, and this has major implications for the economy. First of all, Wells Fargo just announced major layoffs in its home lending business. Why? Well, because people aren't able to do any refis, so they don't need all these mortgage agents if people can't refinance their mortgages. Because where are mortgage rates? 5.5%, something like that. The mortgage interest rate is now so high in relation to where it's been that there's nobody who can now refinance their mortgage into a lower rate, because everybody's got a better rate than what they can get now. And that refi lifeline has been a major lifeline for the economy, because it's given households a source of income, because you only refinance your mortgage if the result is a lower payment. And if homeowners are able to lower their payments through a mortgage refi, then they have extra money to spend because they're not spending.
All right. So, I mean, he does have a point around mortgages and how we need to be able to do different types of refinancing. I mean, the housing market seems like crazy. I mean, if you look at some of the stock prices, if you look at your own house, if you own a house and you go on Zillow, it's probably up a lot more. Let's see Kramer talk about Cathie Wood.
The double downgrade was so gratuitous. I mean, now you double downgrade them. I think Ford's got a great lineup. I think GM's doing well. I think the Cathie Wood is the kiss of death. The Coinbase call was embarrassing. They acted as if there was nothing wrong. I think GM's doing pretty well, but people don't want to own that stock going into recession. So, I mean, look, there's a lot of setups that are real bad, but let's deal with the setups that are not as bad. There's a lot of food and drug that's good. I know people don't want that, but that's working. And there's a lot of companies that have come down a great bit. Now, soon, I mean, if General Motors offered a dividend, which Mary Barr didn't want to do, I think people would be reluctant to sell it here. But it really is true that Cathie Wood is the kiss of death. And, you know, you usually don't want to say that, but I think you have to throw out all the bromides and really speak truthfully.
It's kind of crazy that Kramer says she's the kiss of death, though, because he said Coinbase at 475. He liked Palantir. He liked a lot of these stocks, man. Like, I wish we could find that video on Kramer on Coinbase. Kramer Coinbase 475, because the guy really did. Look at this. Jim Kramer endorses buying Coinbase stock for the right price a year ago. Like, come on, man. Like, I don't know. Let's listen to him right here. What he's saying about Coinbase.
Let's start with Coinbase. You heard Brian Armstrong earlier this morning on Squawk. Heard you talking about it a moment ago with Joe. This reference price at 250, below where it was trading in the private markets.
Yeah, look, I mean, that's a joke. It doesn't help. It doesn't reference anything. And I was listening to Andrew's unbelievable interview. I mean, you can tell this is the one. This is the scarcity value one. And I wouldn't be surprised if it ultimately gets to 600. That's Lisa Ellis's target. She's been spot on everything crypto. And it's going to take from initially Square's going to go up because Square's been the way. But
he just said he's not surprised if it goes to 600. Like, I mean, and that's my point, right? It's nothing against Kramer, but when you're a public image, you have to have an opinion on everything. So when he's saying she's the kiss of death, it's a little mean for no reason. You know, just because he has to always have a comment
here because the viewers deserve it.
Jim,
she's awful.
I've been
the video stopped for a second.
Of some type, but do you ever remember a market bottom that's made before there's an overall capitulation across all indexes? I mean, is it possible that the individual leaders could have their own little, you know, where everyone just basically pukes up everything that they have? I mean, you look at Netflix or even the big tech leaders, aren't they down enough to make a real bottom individually?
I think that they're, you know, people just sell them because they're a source of funds. I mean, we've had bottoms that are caused by, say, Warren Buffett coming in and buying. We saw that with Bank of America. We've had bottoms where they wiped out 330 new companies that came public between 1990 and 2000. So, I mean, there has to be more destruction. We had a bottom in...
So Kramer's thinking we still have more to go, which, you know, theoretically makes sense. S&P at 3935. Wait a second. Where's the S&P? Hold on. SPY. 388. Okay, that was actually higher than we were last time. All right, let's finish this video and then we'll move on.
You know, we had a 2018 bottom but that was with the S&P at 13 times earnings. We're 16 to 17 times earnings, so we're still a little too high. But the panic's pretty thick. We have to find out how much systemic problems come from Tether. We don't know because the information has always been so sketchy. I mentioned Coinbase. I picked on them because they picked on Gary Gensler, which turned out to be not a great thing to do. But look. I mean, are there things to buy? I think there are things to buy. It's just that I think that we have to watch the big mega cap tech companies come in a little more to where the point that their multiples are lower. And
all right, so that's Cramer's thoughts. Money Talks just came out. Let's, if you guys, before we play the intro, we talked about a bunch of different topics today. If you guys watched the last episode, I was fired yesterday. Oh, it's not showing it right here. Oh, here it is. We did do this one segment that I want to highlight, which was, we talked about Kramer versus Kathy, but we also talked about, oh, did they put it in there? It might have been in the hot take. Well, we supposedly, I'm not sure if they kept it in there, but we talked about how to deal with the psychology of losing money in the stock market, and I think that was part of the hot takes actually. So we talked about that. That was important. Look, this market's rough. Let's go to Palantir. Let's see how Palantir's doing. 689. Well, Palantir's making a recovery, up 3% on the day. Not bad, right? Not horrible. SPY down and Palantir up feels so weird. Yeah, I wonder if Palantir will ever enter in the SPY. I can see S&P hit 500, even 2.5K. I mean, that would be a true 2008 type of recession. If SPY gets to 250, remember SPY was at 250 at the height of COVID, or at the height of right before COVID. This was SPY at look at this right here. Right before COVID, we were at 319 on the SPY. Then we fell to 212. So we didn't go 50% down, but it was close, right? And then we just made our way back up. So theoretically, if we go from 470 right back down to like, what is this, a 240, 250-ish range? That's basically where we were April 2020, which means we give up everything over the past 2 years. All the gains gone. And that's what happens in a market. That's what happens in a recession. So, I mean, that's ultimately it would be bad, but I don't know if it gets that bad. Like, I just don't know if it gets that bad. If it does, then it does. But at least we'll have found a bottom at that point. Like, could you imagine the S&P just goes to like $6? Like, I don't know if we're gonna have a planet anymore, bro. Like, it's just that would just be crazy. Yeah, that would be bad. Let me go back to the S&P chart. When did the S&P start? Okay, this is 1993, right? So when did the Dow Jones start? Is there a max on there? Range max? No, it doesn't show that. How about the NASDAQ? What is the index that was around since the Great Depression? I don't know if I'm not sure exactly what it was, but the NASDAQ started in 1991. And it was $376. It reached we were at 16K on the NASDAQ in 2020. Wow. And we dropped. Tough, man. Don't forget the Fed still has to tighten more. Yes, that is true. The Fed does still have to tighten more. The U.S. economy is strong. The beta males are selling. We will go places. Yeah, I agree. I mean, it's hard to bet against the U.S. I'm not saying in a 3-month time span it could be a slow burn for a couple of years. I feel like it would happen sooner than a couple of years. I mean, it depends. You could be correct if inflation it just is elongated for the next couple of years for it to finally slow down. But I guess we will see. I guess we'll see. The Dow. Okay, so the Dow has been down there. I have a newfound love for coin. How's Coinbase doing? Coinbase is rough. 49. Man, oh man. So in general, the market hasn't been horrible today. Like the market's rough to some stocks, but like Tesla's got hit, Palantir got hit, but Palantir making a recovery back to 7 potentially. Like the market's been relatively flat. I mean, things are down today, but it's not insane. I mean, Roblox is up 10%. Look at that. That's nice. Roblox was at $20 yesterday. I think the CEO went on CNBC, did some talking, and Roblox could be seen as just pretty undervalued. Yeah, I mean it's just another day in the market. Nothing too insane, but this is what we're seeing. All right, guys, that's it for me. Thank you so much for joining this Thursday morning live stream. I will be back tomorrow, Friday. Appreciate everyone being here. All 292 of you guys joining me in the morning. I'll see you tomorrow. Biggest thing for me is to keep your head up high. Don't look at your portfolio. Do some other stuff that's important, that gives you purpose, that gives you meaning in your life. If you don't need this money, it'll eventually come back if you're in the right stocks, if you have the right conviction. And you got to give it some time now, because no one can time the market. There's other ways to make money than make money in the market, especially if you're not day trading. Then you weren't going to make money for the next 5 years anyway, because that's how long it takes for a stock to really appreciate to the point where there's meaningful returns. So we have to go about our lives in other ways. BBLN up 17%. SPAC problem solved. All right, guys. Thanks so much for joining. I will see you guys tomorrow. Bye-bye.